All right, ready to dive into today's market roller coaster. We've got a stack of fresh financial news, hot off the press. We're talking Tesla, Boeing, those airlines everyone's using to travel, and even, would you believe it, the truth about those weight loss wonder drugs and what they mean for your wallet. Or not tea.
It's pretty wild, right? How differently the market's reacting to everything. Some companies are blowing expectations out of the water while others are hitting some serious turbulence. Really goes to show how much weight investors put on every little bit of news.
So first things first, what's the overall market sentiment looking like today? Give us the big picture.
Think of it like a global mood ring, you know?
Yeah.
The S&P 500 and NASDAQ 100 futures, they're pointing up at least. Hints at a positive open.
Sounds promising.
Yeah, and European shares are climbing too. But then you look over at Asia and things are a little more subdued.
Subdued, huh?
Yeah.
What's going on over there?
China and Hong Kong stocks, they're down. Investors are playing it safe. You've got the U.S. presidential election looming, plus some shaky manufacturing data that could sway the European Central Bank on whether to cut interest rates.
Right. And of course, we've got all that geopolitical drama unfolding.
Oh, absolutely. Middle East conflict, tensions are running high. And then there's a whole North Korea situation. Rumors they might side with Russia, which is making folks pretty nervous.
A lot of uncertainty swirling around for sure. So what about those safe havens like gold and the dollar? Where are they at?
Well, the dollar's holding strong, no doubt about it, sitting at a 3-month high. That tells you people are still craving stability.
Makes sense.
Gold is up a bit, but oil is on the rise too. And that's usually a sign that global tensions are heating up, no two ways about it.
So a lot of external factors in play. But let's zoom in on some company-specific news. We've got some real head-scratchers in these earnings reports. Some companies are soaring, while others are, well, not so much.
It's a real mixed bag, that's for sure. Tesla, for one, they're leading the pack. Shares are skyrocketing.
Skyrocketing, huh? What's driving that?
Well, Elon Musk, he's projecting some major sales growth for next year. Plus, he hinted at a new, more affordable electric vehicle.
Affordable Tesla. That's an interesting concept.
Yeah, if they can actually crack the mass market while still holding on to that premium image, that could be a real game changer.
Couldn't agree more. And didn't he also throw out the idea of those driverless robo-taxis?
He did. Claims they're on track for next year, pending regulatory approval, of course. If it actually happens, it could disrupt the entire transportation industry. But for now, it's still in the wait-and-see stage. Classic Elon Musk. Always pushing the envelope.
Always pushing the envelope. Speaking of which, Boeing seems to be facing some serious headwinds, yeah.
Unfortunately, yes. Shares took a hit after their workers rejected the latest contract offer. Strikes dragging on.
Not good.
Nope. Throws a real wrench in their plans to stabilize finances and rebuild their image after those safety concerns.
Right. So we've got Tesla racing toward the future and Boeing grappling with some very present-day problems. Real study in contrasts.
Absolutely. But let's not forget about the companies that are quietly exceeding expectations. Take UPS, for instance.
What about them?
They just blew past profit estimates. And get this, they even raised their operating margin forecast, meaning for every dollar they make in sales, a bigger chunk is turning into pure profit.
And how'd they pull that off?
They ditched their Coyote logistics business. You know, the one that was always so unpredictable, streamlining for success. And speaking of success, American Airlines is riding high too.
Oh, yeah. What's the good news there?
Increased their profit forecast, thanks to all that travel demand, plus better pricing power since airlines have been trimming capacity.
Fewer flights, higher ticket prices. Definitely something to think about if you're planning a trip anytime soon. But not every surprise is a good one, right? What about those weight loss drugs everyone's been talking about, the supposed miracle cure?
Well, it turns out those miracles might cost you.
Oh, how so?
Early data is suggesting that while these drugs can definitely help people drop some pounds, they haven't really made much of a dent in healthcare costs.
So you might end up with a slimmer waistline, but your wallet might not be feeling much lighter. Fascinating. Now let's dig a little deeper into some specific companies. I'm kind of intrigued by American Airlines, actually. How are they managing to trim capacity when everyone and their mother seems to be traveling these days?
That's a really good question. Gets at the heart of how complicated the airline industry is. See, they reported a net loss, $149 million for the quarter, but their total operating revenue, that actually ticked up a little.
Okay, so they're losing money, but bringing in more revenue overall. How does that work?
Yeah, it might sound counterintuitive, but it's economics 101. Sometimes cutting back on supply can actually boost your profits, even if it means selling less. They're basically creating artificial scarcity. Fewer flights, higher prices, and they're betting people will pay a premium for those limited seats.
Risky, but it seems to be paying off, at least for the moment. What about Harley-Davidson? They've trimmed their revenue forecast, right? Blaming weak demand for motorcycles.
Yeah, in North America specifically.
You think that's just an American trend, or is it something bigger?
Good question. Their net income's down considerably compared to last year. So that does suggest people are spending less on, leisure items. Could be a sign that folks are tightening their belts with all this inflation and economic uncertainty.
So maybe it's not just about motorcycles. Could be a broader reflection of consumer confidence. All right, what about Hasbro? They actually managed to boost their margins even though sales dipped. How'd they do that?
They got serious about cost controls, implemented some pretty strict measures to keep expenses down, helped them stay profitable even with the sales slip. Good lesson there for other companies trying to navigate this tricky economy. Sometimes it's not about selling more, it's about managing what you have more efficiently.
Efficiency is key. Makes a lot of sense. Okay, let's talk about a company facing a real dilemma here. Spirit AeroSystems. They're burning through cash, and their biggest customer, Boeing, seems to be holding back on some promised funds. What's going on there?
This is where things get interesting. So Spirit AeroSystems, they're a major supplier for Boeing, right? But the relationship seems kind of strained. They had to tap into this $350 million bridge loan, short-term loan, to cover a gap in financing. Boeing was supposed to cover that.
And they didn't.
Nope. And on top of that, Spirit hasn't gotten another $425 million in advances they were expecting.
So Boeing's essentially leaving them high and dry. Why would they do that to a major supplier?
Harder to say for sure. Could be a power play. Boeing's got their own financial headaches, so maybe they're using this as leverage to renegotiate terms with Spirit. Or maybe it's a sign that Boeing's not so confident in Spirit's ability to deliver on their end.
Either way, it's a risky move for both of them. Spirit needs cash, and Boeing could face production delays if Spirit can't deliver. High stakes, for sure.
Okay, one last deep dive. Keurig Dr. Pepper is making a big splash. They're acquiring Ghost, an energy drink company.
For a cool $1 billion, no less.
Billion with a B. So is this a smart move for them?
It's a classic example of a big player trying to tap into a hot market. Energy drinks are booming, and Keurig Dr. Pepper clearly sees Ghost as their ticket to ride that wave. But will it pay off? That's the big question.
What are the potential risks and rewards there?
Well, the energy drink market, it's cutthroat. Ghost has a loyal following, sure, but they'll be up against some heavy hitters. Keurig Dr. Pepper will need to flex their muscles, use their distribution network and marketing power to make Ghost stand out. If they can pull it off, they'll get a nice chunk of a fast-growing market. But that competition is fierce.
So we've talked about companies making moves, shaking things up. But what are the experts saying, the analysts? What do they think is coming down the pipeline? Analyst predictions, those are kind of like educated guesses.
Right.
They give us some insight into how the market's viewing these companies, where things might be heading.
So who's caught their attention today? Anyone interesting?
Well, JP Morgan's got their eye on Coca-Cola, and it ain't exactly bubbly news.
Who? What's going on?
They cut their target price for the stock, predicting a slowdown in sales volume.
Huh. Is that a Coca-Cola problem, or is it something bigger, you think?
That is the million-dollar question, isn't it?
Mm-hmm.
JP Morgan seems to think it's a broader trend, like maybe people are just cutting back on sugary drinks.
Health concerns, changing tastes, maybe just tighter budgets?
Could be all of the above.
Maybe it's time to swap that soda for sparkling water, huh? Speaking of trends, RBC seems pretty optimistic about General Dynamics.
They are. Raised their target price after the company posted some strong earnings.
What's driving their success?
Well, General Dynamics, they're a big player in defense and aerospace, so their performance could be a sign that governments are, prioritizing defense spending.
Yeah.
Especially with all the geopolitical tensions heating up.
Makes sense. So while some companies struggle to adapt to changing consumer habits, others benefit from global instability. It's kind of a fascinating paradox when you think about it.
It really is. The world's a complicated place.
Ain't that the truth? Any other analyst recommendations that jumped out at you?
Let's see. Morgan Stanley downgraded their target price for IBM.
IBM? What happened there?
Tech giant missed revenue estimates. Their consulting segment seems particularly weak. Could mean businesses are putting the brakes on discretionary spending.
When the economy gets wobbly, everyone tightens their belts. Classic sign of uncertainty.
Yeah.
Anything else worth noting?
Oh, Canaccord Genuity is feeling bullish on Tesla. Raised their target price after those impressive third-quarter results.
Tesla. Always a wild card, aren't they?
You never know what they're going to do next. But they're innovators, that's for sure, and they capture the public's imagination.
No doubt about it. Okay, let's step back from earnings and analyst predictions for a minute. What about the bigger news stories out there? Anything catch your eye?
Yeah, there were a few that really highlighted how business, politics, and society, they're all tangled up together. The one that really struck me was Apple doubling down on China.
Doubling down? What do you mean?
Well, despite all the tension between the US and China, right? Tim Cook, he actually met with Chinese officials, pledged to increase investment in the country.
That's a bold move. A lot of risk involved there. What do you think Apple's strategy is?
It's a high-risk, high-reward play, that's for sure. China is a huge market for them. They clearly don't want to lose that. But they're also opening themselves up to potential backlash, you know?
Walking a tightrope, for sure.
Yeah.
Gotta navigate those political and economic winds. What else? Any other big stories?
Yeah, the Boeing strike. Workers are demanding better wages, and they want their pension plan back.
The one Boeing did away with a few years ago.
That's the one. It's more than just a typical labor dispute, if you ask me.
What makes you say that?
Well, workers are feeling the squeeze, right? Inflation's eating away at their wages. They're demanding a bigger slice of the pie. And the outcome of this strike, it could have ripple effects across other industries.
Could set a precedent, yeah. Something to watch closely. All right, anything else?
There's one more story that's pretty troubling. Abbott Laboratories and Reckitt's Mead Johnson, they're facing a lawsuit over baby formula.
Baby formula.
Yeah, it allegedly caused some illnesses in infants.
That's awful.
It is. It really highlights the responsibility these corporations have. Got to make sure their products are safe.
Absolutely. Holding them accountable is crucial. Well, we've covered a lot today. Tesla's big plans, Boeing's labor troubles, Apple's delicate dance with China. What are your main takeaways? What's the big picture here?
I think the big takeaway is that everything's connected. Economic decisions, they're influenced by politics. Corporate actions have social consequences. And individual choices. Those can ripple outward, impact the whole world. Understanding those connections, that's more important than ever.
Couldn't have said it better myself. So what happens next? What trends should we be watching? And most importantly, what does all this mean for our listeners?
All good questions. We'll explore those right after this quick break.
Okay, we're back. And you know what that means. Time to connect the dots. See what all this financial news means for you.
It's a lot to take in, that's for sure. All these market movers and shakers, up and down, left and right. But the key is, you gotta focus on the big picture, the trends, and understand how they might impact your own financial decisions.
Exactly. Don't get lost in the weeds, right? Step back, look for those overarching themes. What's the story here?
Well, we saw some companies, like Tesla, embracing innovation, charging ahead. Others, like Boeing, dealing with pressures, both internal and external. Yeah. It's a reminder that no matter how complex things get, there are always opportunities and challenges.
So what's the takeaway for our listeners? What should they be thinking about as they make their own financial choices?
First things first, don't panic. The market's going to be volatile. That's just how it works. Ups and downs, it's a roller coaster. What matters is you stay informed, do your research, and make choices that, line up with your goals. The long game.
Don't let the short-term noise throw you off course.
Exactly. And diversification. That's key. Don't put all your eggs in one basket. Spread your investments out, different sectors, different asset classes. Helps manage risk.
Solid advice. So what trends are you watching? What's going to shape the market in the coming months? What's on your radar?
Well, geopolitics, that's always a wild card. The Middle East conflict, the whole Russia-North Korea thing, those could ripple through the global economy.
And the U.S. presidential election, of course. How's that going to play out?
Elections always bring uncertainty. No two ways about it. Investors will be watching closely to see how different policies could impact, specific sectors, industries.
Gotta stay informed, be ready for anything. Any other trends you're particularly interested in?
The rise of AI, that's definitely something I'm watching. Companies like Tesla, NVIDIA, they're going all in on AI. It could revolutionize everything.
AI is already changing how we live and work. And it's only going to get bigger. It's a trend worth watching for sure, not just as an investor, but as a citizen of the world.
Absolutely. So as we wrap up our deep dive today, I'll leave you with this. Don't be afraid to ask questions. Challenge assumptions. The financial world can seem intimidating, but knowledge is power, right? The more you understand, the better decisions you can make.
Well said. So stay curious, stay engaged, keep learning. You never know what you might discover. Thanks for joining us for this deep dive into the market's twists and turns. We'll be back soon with more insights and analysis to help you navigate the world of finance.